Okay.
Yo guys, we back
Hey.
today. Woohoo! It's Sunday. So yeah, Sunday. Remember, we're gonna take things slow, but welcome back to TFC Daily. It's initiated by the team at the Financial Coconut to keep you company for during this tough times. Okay, so follow us on our socials, check out our podcast and all those kind of stuff. Yeah, I'm just gonna keep it lean today, and we're just gonna have some fun together with Rakesh, our friend here, and Chung Soon. I mean, we've interviewed so many people this whole week, so yeah, this is the start of something new. Sorry, High School Musical.
So before we actually let's dig into what's happened in the markets and all that good stuff, we do have a new guest today, and our guest here is Rakesh. So Rakesh, if you don't mind kind of just introducing yourself, telling us everyone who you are, what you're up to, and some things that you're interested in talking about today. Just a little teaser, don't need to go digging right now.
Yeah, sure. Hey guys, my name's Rakesh. I'm over here in central Singapore, actually near the Hougang case, actually. One of them blocks.
Oh shit, you're near the blocks. Oh yeah.
Yeah, I'm near 506. Yeah, but I'm not leaving my house.
Oh yeah. I delivered the microphone to where you stay. So yes. Damn. Yeah.
Yeah, so definitely staying in the house, staying safe. I work in healthcare, but I love looking at stocks and trading them. And some things on my radar this week is that my stocks aren't doing very well, right? So I'm heavily.
Are you more fundamentalist, or are you very technical in that sense?
Oh well, I hope to be a fundamentalist, but I think at this day and age, it's very hard to do that, especially in COVID.
Why do you think so?
I mean, I think that the Trump economy started kicking things off, and everything sort of just started growing, especially during COVID, right? When quantitative easing came in and everybody started to move away from all of that and move towards stocks. And especially, so I'm quite heavy into tech as well in my stock portfolio. And so it was doing very good.
Explains why it didn't do so well for the past few weeks.
Yes, absolutely. Until about what? Was it April, early May, right? When the Fed started talking about that. So I love to talk about that as well. And I'm not big into crypto. I think that's a little bit of gambling there, but still following it, right? Yeah.
You're in growth stocks. You're in small cap, high tech, fast growth companies, and you tell me that's not gambling.
Well, yeah, you're right. I'm not entirely all into growth stocks, other tech stocks as well, your big guys. But I guess I'm a tech guy myself, so I used to work in a tech company. So that's probably why I'm in that area.
Nice. So what caught you? What's in your radar this week?
So this week is actually more of consolidation for me, just understanding it a bit more, given the US Fed, right? There was this talk of them actually looking to raise interest rates or buy back bonds, and that's sort of affecting the markets. So for me, I'm just watching on that one, reading as much news as I can, knowing when to effectively exit the market before it collapses, or if I can see some sort of decline. So that's my thinking for this week. Okay, and it's next week actually.
Fair, yeah.
All right. I guess we can dig it.
Yeah,
go for it. Yeah.
By the way, I just want to
say,
shout out that if you have any questions today, we're gonna keep it like super free form. So whatever has happened in the week in the market, it'll be a Sunday thing, right? Every Sunday we have this segment for us to comment and talk an idea, right? So if you have all the questions that you have, whatever that is like super messy or whatever that's happening in the market that you don't understand, just put it in the comment section and we can talk about it. Yeah.
Yeah, so I guess Rakesh will be talking a little deeper about the whole tech sell-off later. So I guess that's your little segment. On my end, honestly, like I think my whole week's really just been busy trying to get this whole show structured and like create some sort of process. So haven't really had much chance to look into anything really. But I am interested in kind of talking about a few things I've learned about from my guests. This week. So we had a guest who came on to talk about crypto. So definitely a lot of good fun stuff there to talk about. And then our other guest was on yesterday, Adam. He talked about being like in the YouTube space and influencer of some sort, right? So just really would love to just kind of dig deeper into that. And so Reggie, what do you have on your mind today?
I mean, for the past week, it's been busy, right? Just trying to get this going, doing all that. I know you're doing a lot more. So I had a little bit of time to just kind of catch up on what is the markets for some of the companies that I've been looking at, or I already own them, right? So there are some updates, some interesting companies they have. It's like earning seasons now, right? So earning seasons means like all these things are happening. People are publishing all the results, right? So they're all the different businesses. I don't cover all of them, but I do have a few interesting companies that I would like to, just kind of talk a little bit and see what you guys think. All right. So first company that I want to talk about is JD.com. So JD.com is not your shoe sales, your shoe retail brand that some people may be a little bit familiar with at the malls and all, but they are like one of the biggest competitor to Alibaba, right? So they are doing the same thing, e-commerce, building the whole supply side infrastructure for all these providers and for all these people that want to sell online. So that is the extremely saturated business that they are in, right? Because they are no longer like small guys, so it's already a very, very big business, but they have spent a lot of time trying to pivot into retail, right? So over the past few years they have grown their retail space. So you just think about if Lazada or Shopee starts opening up 7-Eleven style kind of thing. Okay, so that is what is happening with JD.com, and the retail side of business have grown by 30% for the past 5 years, cumulated average growth rate. So that's pretty interesting. It's becoming a very serious business in their repertoire, and if you think about it, they already have such a big supply chain that's being set up, and they are essentially taking whatever that they already have to then pivot into another business. So that's the power of big businesses, right? Everybody's looking for that next big thing, the growth stocks and all this kind of stuff. But some of my friends say the next big thing will be the big things now, right? So they're continuing to be big and they're going to continue to grow. Yeah. Any thoughts?
Yeah, I mean, tell us more, right? So JD is supply side, but they're also doing the retail side of things, or how does that work?
It's like Shopee, it's like Lazada. They're the same, exactly the same. Okay, exactly. It's a little too much, right? So it's like more or less the same. They built the front end, they also built the back end, the supply chain. The kind of you just kind of integrate Shopify together with like the supply side kind of stuff. So it's all the whole ecosystem built on top of that, right? And in China is huge. In China is amazing, right? And actually a lot of big brands that work with them, right? From Nike to whiskey sellers to all these different guys. So yeah, pretty interesting company, and they are essentially like the second to Alibaba in that sense, right? And it's in that business, but Alibaba is huge. They way more than commerce, right? Way more than e-commerce. So in the space of e-commerce, they're like second to them, and they're growing pretty interesting, right? But I'm not sure if they can outgrow Alibaba. So that's one thing.
Yeah, I don't really know much about JD besides the name JD. So I can't really speak about their business model or what have you. I took a quick look just now. I think they're worth what right now? Their market cap is about 904 billion Hong Kong dollars, which is about 117 billion US, right? So to me, I'm like, okay, that's definitely a big company. And like I said, I don't know enough about it to be able to comment about its growth potential. But I would find it hard for that to be a 10 bagger in the next decade, for example.
Oh, for
right?
sure, for sure.
So yeah, so
For
I guess
sure.
from that perspective, not as interested per se.
No. That depends on like what is your investment palette, right? Like what is your investment style? What is your strategy? Are you looking for 10 baggers? If you're looking for 10 baggers, you have to dig really hard. You cannot be on the headlines. You cannot be looking at the companies that are really huge, right? 100 billion, 200 billion. You want them to 10 bag. Wow, that's like Apple or like Microsoft today, right? So it's impossible. And if you want to do 10 baggers, then you got to work real hard. It does not work this way, right? So
Yeah.
I think not everybody is seeking for 10 baggers. A lot of people just want to get like strong growth stocks or like strong tech companies that are doing decent and they can continue to grow. So that's kind of where it is, right? So I don't think I don't think there's like a that's not like healthy to look at it from that angle. Yeah, in my view.
Yeah.
I
yeah.
think it really it depends, right? Because if for example, Alibaba first started off in e-commerce and then they moved to film and they moved to all the other things that comes with it. So I think if JD is looking around that same area, then there could be some sort of potential, right? And you never know with these conglomerates. Actually, one thing I read, I don't know if it's true or not, but apparently Lazada, who is obviously an e-commerce company, is moving offline. I heard they're trying to open up here in Singapore at the old Robinsons on Orchard Road. Did you guys hear about that?
No, I didn't hear about that, but I'm not surprised. You know,
I don't know if it's true or not. But
I'm not surprised. It's been the gameplay for a lot of these e-commerce giants. So it's not about bringing up JD. It's not about saying, oh, is JD a good company, blah blah. That's just too much of a discussion to carry today. But to kind of see that how e-commerce businesses that have dominated the e-commerce space, essentially they are huge giants, right? They are attacking retail. They're coming into retail. They're setting up experiential shops. They're setting up supermarkets. They're setting up like 7-Eleven kind of style businesses. And that is that extension, that kind of pivot into retail, right? Challenging the traditional space. So it's pretty interesting. And I won't be surprised if Lazada actually opens and takes over the Robinson space. Right? That will be pretty cool. Yeah, and Lazada is part of Alibaba, right? For everyone that don't know, right?
yes,
Alibaba
exactly.
Alibaba owns Lazada, so you get the idea that a lot of these companies you kind of box them in, right? I think when a lot of people when they invest in companies or when they look at businesses, they kind of box them into like, oh, this is like e-commerce or this is like entertainment or this company is like blah blah blah, and then you try to look for someone else that's like fast growing and doing really well in their space, but you don't recognize that a lot of these guys, they can actually pivot into a side business. And the moment they pivot into that side business, it's huge. They have all the resources, they have the following, and they have the whole team that can double down on it, right? And that's the exactly the beautiful part.
Yeah. I guess before we continue, I just want to make sure we do give out this disclaimer. This is purely entertainment. None of this is investment advice. So please do your own due diligence and don't take any of our words at face value. All right. Thank you.
Yeah, fair. Okay, so I think
needed to be said.
Yeah, that needed to be said. But yeah, I think that is essentially what I wanted to drive home when I decide to bring up this case, right? This interesting idea of what is going on, right? And then so that kind of wraps up the part, okay? And there are other companies in my repertoire recently that I've been looking at, or I already own them and I've been updated by them. The other company will be Disney. Right, so Disney is an interesting company by now. I think they've done a lot of interesting things. Everybody knows Disney, but a lot of people don't recognize that the power of Disney is distribution, not content. So content is very powerful. Yes, they already have very high hit rate in terms of how they create. But if you think about it, once they create one content, they can spin it off to become a theme park, a movie, stream online, and all those kind of things. So that's the power of distribution that Disney has. And they are really a big player. Potentially, they can fight Netflix. You never know that. But I think one big problem that people don't recognize about the Disney Plus kind of strategy, the Disney Plus play, is that content licensing agreement actually went down by 36%. Essentially, what Disney used to do is that they will build all these content, right? So after they build this content, they will distribute through whatever means that they are traditionally at, which is ESPN, Disney Channel, and theme parks, movies, and all this kind of stuff. And then anything beyond that, particularly in streaming, they license it out. So they sell Netflix the rights to publish, they sell Hulu, they sell to whoever so and so that wants to stream Disney's content onto their platform. And the day Disney decided, okay, we're going to come in, we're going to attack this business, that's the day that they lost that part of the business, right? Which is no more licensing. Nobody will buy your content anymore. They're gonna rail that all that back in to double down into the streaming interface. So they're gonna eat up that whole chain on their own. And they have already, it's already showing they've lost 36% of licensing revenue just on that. But on top of that, their growth rate on the streaming business is slowing. It's interesting, right? So they have reduced their prices from like about $5.60 to $3.99. So they're going through a promo, yet in the promo period, their growth rate missed expectations. So that is a big question mark as to what is going to happen in the streaming space. And yeah, I'm just curious, like, where do they stand and what is the future? Well, any thoughts?
I've been a fan of Disney's model for a while, especially I guess once they kind of like really told and announced like their whole plan of like all the content that they're planning to create the next few years, right? I think I could see them doing a lot better than a Netflix, for example, right? I think with Disney, the content side or the whole like streaming side is just one side of the business, right? And I would argue like that's probably not really where they're trying to make the money. That's probably where they're trying to just fund or just collect data about what they should be doing, like from a attraction perspective, from merchandising, from which stories to spin off perspective. So I think that's like that to me is what Disney's real power is like the amount of information they're actually collecting about their users and how they consume the platform, right? I remember reading or hearing something about most people who own Disney actually aren't families, right? They're just individuals like you and me. Sorry, Rakesh, I don't really know if you have a family at this point, but I don't.
Yeah,
right?
it's a family. Yes.
Okay, and do you have Disney?
Of course, I have Disney. No, it's me and my wife. But yeah, I've got Disney.
Yeah. So yeah, I mean, a lot of people are ones without like children, right? So that was just a pleasant surprise for me because when I thought Disney, like I always thought like they're the Disney Pixar franchises, right? Which is really heavy on the family side. But it seems like the people who really like the Marvel side of things are really stepping up and supporting Disney through this whole period. Right, so I find that super fascinating. There was something else that you mentioned, but I don't remember what it was. So, yeah, so I'll leave it at that for now.
No, but I want to challenge that idea that Disney is not out for profit, right? They just want to like Disney Plus is something that they want to collect data and all those kind of things. I think that is too far a stretch. All right, that is like it's like too fantasizing like their business. If you think about it, Estee Lauder is doing a lot of sales online. They have set up a whole infrastructure to collect data, experience for their people and all those kind of things, but they still want to sell a lot of product and they're not trying to be a tech player. So I don't think Disney is trying to be that gather all these data so that they can decide how to merchandise certain things. And merchandising is a very small business in Disney. Relative number one is broadcasting. That is the biggest business, which is like it's a shit show now. It's getting cut because of all these streaming, right? Number two is parks, all right? So essentially, merchandising is one of the smallest business, but it's not small by any chance. It's one of the smallest business, not small by any chance. But to think that Disney is trying to do all this or harp on this idea that Disney can do all this and collect all this data and potentially make money. That's like that to me. That's like pretty far, down the chain. I really think Disney is serious in this gameplay, and they're playing it to get the streaming revenue. They're doing it to get the kind of recurring revenue that they are seeing with all these other players. They're getting recurring revenue. Netflix is an extremely profitable business. The problem is that they have to spend for content, right? So if you talk about
Did you hear about Netflix's? I think their biggest spend for content right now is with The Lord of the Rings.
Really?
Oh, is it?
I think they're paying New Zealand about $500 million to shoot one season of Lord of the Rings.
What?
Oh my God! Wow.
I'll have to find that article for this show somewhere. Hold on.
What?
So yeah, sorry. Just
that's
FYI.
crazy.
What?
And I think that's my example of like, this, because Disney's like repertoire is, yeah, I agree that, with Disney, they don't have to, they create their content, they create their own IP, right? Which makes it a lot more like, and they have the whole control over it. Whereas with Netflix, yeah, they need to be spending or finding people to, yeah, essentially spending or all that to really keep their content coming in.
I mean, at the same time, Netflix is really also trying to create its own content, right? It's owning that whole flow as well, and I believe that's where they want to. I think my thoughts on this is that Disney already has cornered a couple of markets. One, it's the children's market. It's always going to be there, right? Disney classics, top to toe, generational, that you're just effectively going to grow up with Disney, right? The other two, which they have clearly bought, is Star Wars and I mean LucasArts and Marvel, right? Which gets to CS's point where, people who don't have young children are actually buying into Disney because of all the content that's going to happen in Phase 4 and Phase 5 of Marvel, as well as, The Mandalorian when it came out, and Star Wars, as well as I think they've got one more. So I think, in that sense, yes, they may not be focusing on that as much as content, such as Marvel and Star Wars and stuff like that. But at the same time, I think it's a market that they were always in, distribution. And they're realizing that they're going to be cornered if they don't start something, because Netflix is already there. That infrastructure is massive. Huge. And I have Disney, I have Netflix. Whether it'll be a substitute is a whole different ball game, right? I don't think it is. I have Disney, I have Netflix, and I have Amazon Prime, right? Mainly because Amazon Prime is $2.99, but
yeah.
But I don't see it as a substitute because it's different content, and as long as they have that content, and for me the content is the play, I will still keep Netflix because of its great content coming in, from documentaries to every other new thing that's popping up. I agree, though, that they need to still spend more than Disney in terms of content because they still need viewership. Disney will always have these three viewerships because they already own these three. It's effectively like a cult following.
Yeah, they have a cult following. And Disney bought Nat Geo, they bought History from Fox.
Yes.
Right. So they have all these different documentaries coming up also. And they have like Pixar Studios. And I think one thing that people have to realize, the fundamental difference between Disney and Netflix is that, yes, Netflix has that whole tech infrastructure, they've built this whole thing, but they have a lot of third-party producers. Right, so they have a budget, and I give you a budget, right? So I'll give you a budget. You have an idea, okay? I will fund your idea. You go and publish. Let's try one season, or let's try 3 seasons, or let's try 1 season plus options of 2 seasons. Okay, that's preliminary the idea. So if first season works, okay, immediately next week I can say, oh, we're gonna continue. There's another season, blah blah blah. Of course, they already signed an option, right? So 1 season plus 2. 3 seasons. What happens after 3 seasons? After 3 seasons, the stars become famous, the storyline becomes famous, the brand goes up. When they re-license the whole thing again, it triples. So like for 100 million budget, becomes 300 million. It's like, oh my god, another rubbish. Right? So Orange is the New Black, one of the iconic series that came out on Netflix, came out of nowhere. But every 3 seasons that they were kind of re-signing, it just kept going up. All these random ladies that were not as famous, they were like B-level artists. They became A-level artists after Netflix, and then it just kept going. But Disney has everything in-house. It's not like I'm not licensing to you. I'm like, you are gonna create. There's ongoing fixed costs that I have to bear for all these production house in my repertoire. So you're gonna create either way. I'm not giving you a production budget to license a third-party creator. Right, so I think that is the fundamental difference from a content creation standpoint, and I still don't see Netflix going down the path of really internalizing, because that will add to OpEx, right? Essentially, your operational expenses. You got to in-house all these content, and then it becomes very, very bottom heavy in terms of like business, right? So there's a lot of costs ongoing. Whereas Disney takes that same cost, but then spins off into other different businesses that they already have, right? So that's the part that I think a lot of people may not see. I don't know. What are your thoughts?
No, I totally agree. I think that is one of Disney's like largest struggles is, in order to continue one of these series, they need their main actors, right? and so in a sense they're almost like held hostage from the actors themselves. But at the same time, I guess I also find it really fascinating that like they've been able to really they've been really good at like turning their side actors to become main stars for their shows, right? So for example, like and a side note here, like I've watched both of Disney's newest series originals, like WandaVision and what was the other one? Winter Soldier.
Falcon.
Yeah, Winter Soldier.
Falcon, Winter Soldier.
Yeah, they were both really, really well done, right? But before that, like I never felt like I cared much about those characters. So in a sense, they were able to elevate these side characters to become lead players, and at the same time during these seasons, they've also introduced new characters that have potentially new powers that they can spin off in the future, right? So that to me, I feel like it's a way for them to kind of like keep their costs controlled. But yeah, I totally agree in the sense of cost, personnel cost is definitely going up every single season.
I think the one thing this is good for is the actors and the actresses, right?
Oh yeah, for sure.
Yeah. I think one thing, I don't know if it's true, but apparently Netflix could be in contract with that actor, not necessarily for that film, but X number of years. So they're exclusive to Netflix or they're exclusive to Disney, and then they just place them in different shows and so on. So I think in the form of your Stone Cold actors and all of them, I think they're loving this whole area now.
For sure. By the way, for a lot of people that are not in TV production that's listening in, there is a saying in TV production that they call it top of the line and bottom of the line, right? So top of the line are people that you cannot replace, your directors, your main producers, your script writers, and all those kind of stuff. Bottom of the line are people that you can replace, the people that are holding the lights, doing the sound, and maybe even your cameraman, unless they're like super amazing. And actually your actors are all bottom of the line until it starts. So the moment it starts, we start filming, we start showing, shit, they're all top of the line. You cannot replace them. If not, it will be so weird, right? So that is an interesting part about content, right? And I think in this space where people are trying to churn and all these kind of stuff, especially a lot of money is going to content. Yeah, so definitely actors are your winners, but it does not mean that we're telling people to become an actor. Yeah. But we did interview a YouTuber this week, right? So any interesting insights from our fellow YouTuber friend?
Yeah. So yesterday we interviewed Adam. So he runs actually two different channels, or he ran two different channels, right? So he initially he is a game developer, and he started a YouTube channel just teaching game developers how to use different programs to actually create levels on game levels and all that, right? And then eventually he got more people asking him to about his whole experience running a YouTube channel, right? And that's when he was like, oh, okay, it seems like I can help more people if I teach them the ins and outs of running a YouTube channel, as opposed to just that game developer niche. I find it really interesting in that the amount of work that goes behind one video is I don't know how many people would actually appreciate how much goes into it, right? The whole pre-production side, it's a whole beast on its own. Coming up with a topic, figuring out how you're going to record it, are you going to use B-rolls, and then once you have it all scripted out or what have you, then having to actually look into that camera directly and say whatever it is that you were trying to say, right? And for a lot of people, that's where they struggle, right? To just look at that camera and speak as if you're speaking to actually someone there. He was telling me that I think most of his videos are 10, 15 minutes long, and it takes him 4-6 hours just to create one of them, right? And a lot of it goes into research about what the topic should be, how do you structure the content from a search, from an SEO perspective, and then the post-production side of how do you actually do all the edits, figure out where your cuts should be, add in B-rolls, how do you do retakes and all that good stuff. So definitely really I can see him really succeeding in it, in the sense that he's doing it all himself, so he knows all the processes in and out. So once he actually is looking to start bringing on people, he knows how to direct them and give them the right next steps, right? So super excited to see where it takes him. But for those who are interested, you can check it out on our YouTube channel. It is right there. Just click on the live section and you'll be able to see all the different lives we had. So this one was on the 22nd of May,
which was yesterday.
which was
essentially.
yesterday.
Yes, it was.
Yeah.
Yes.
Yeah, it was yesterday. But yeah, and YouTube, Google's latest earning release had YouTube inside. So for the longest time ever, it's one of those things that people like Google does not share, right? So it's always about AdSense. People don't know exactly what is the revenue that's coming out of YouTube, right? And apparently it's a mammoth, right? So people are like, oh wow, the whole growth of Google, it's really like pivoting on YouTube today. Right, so YouTube was growing at like what 20-30%. That's pretty nuts. All right, so that is some crazy shit. But does not mean you can be a YouTuber and make money.
We do go into it. We do go into all the different ways of monetizing, and spoiler alert, doing it for the ad dollars is the worst way of doing it. So lots of other ways. Check it out if you're interested. But going back to the whole comment about YouTube being the biggest driver, I'm honestly not that surprised, right? YouTube is already like the second largest search engine in the world after Google, right? And there's always like people are bidding on the keywords right away. And when you watch a video, like you're always being targeted with ads, right? So yeah, I'm not surprised at all.
Yeah, definitely. And I mean, to add on, their suggestions as you watch that video is amazing. Like you could just stay hours and hours, and people do, right? Just constantly on YouTube, just pressing those related comments.
And when I am, because I have multiple YouTube accounts, right, for work and all that kind of stuff. So when I log into a YouTube and then I just scroll through suggestions, I'll be like, this is not my YouTube account. I can be that certain. And then I look at the top, it's like, yeah, this is the work account. Let's change. Right? Because the suggestions are so accurate and so targeted. The moment I go in, I was like, nope, none of these are what I watch. Right? So that's amazing. Like what you said, right? Yeah. Totally agree.
Yeah.
Oh, interesting.
All right, Rakesh. We've been, I guess you've teased us a bit about some of the things that you're looking at. Or were there any news about any of the companies that you're kind of following or related to, or any like industry news that came out this week that you found fascinating?
Well, I think person that fascinates me a lot is Mr. Musk over there. I think he fascinates all of us.
Tell me, what happened there?
So with Elon Musk, was it this week that he came out and said that Tesla will not be accepting cryptocurrency for their cars, and then Bitcoin literally plunged as part of that comment. So for me, that was, and it rose because of his comment saying that Tesla was going to start accepting Bitcoin for purchases, and that was, for me, that's a lot of power. for someone to move that market that fast, that quickly, is definitely newsworthy, and that power of influence there is immense. So for me, that really took the cake, and now it's going down. But yeah, what are your thoughts when you saw all of that?
I thought the moment I saw, so at Wall Street, I'm a Wall Street Journal subscriber, and then I saw breaking news. I was like, nah, this guy's a scam. That was the first thing that went through my head. Okay, I know there are probably some Tesla lovers out there, some Musk supporter. I was like, this guy's an asshole. He's a scammer. Okay, why did I say that? Because what was his reason? Bitcoin is not green enough. I'm like, seriously, dude? You don't
environmental concerns.
Yeah, environmental concerns. You sure? You sure it's about environmental concerns? Right? Aren't you doing like a classic pump and dump, using your influence, shaking up your balance sheet, and all this kind of stuff? And it was so stupid for him not to release more Tesla shares at its peak. So that's a whole different discussion with Michael Burry and all those guys coming in, and but just on this Bitcoin thing, when I saw it, I was like, this guy is a sham. I find his like I respect him as an entrepreneur in the sense that he dares to challenge and he dares to create and he dares to go and do things and be wild and whatnot, right? But at some point, at a certain level, you got to smell through that bullshit. It's like it's just like the boring company is not boring anymore, right? There's no big projects that it's boring. SpaceX is flying up, yes, and landing back down, but it's not solving the fundamental problem. The fundamental problem is fuel cost. It's a lot of the spacecraft's cost is very, very lean already today. Yes, it may, if you can repeat it long enough, it may, prices may come down, right, per flight. But one of the heaviest things, much like air flight, is actually fuel. So until you can solve the spacecraft fuel cost, it's not going to really change the kind of cost to air travel. Right? So that is another problem. And then there's Tesla, which they have done an amazing job. Okay, I think Tesla is probably his best bet. Okay, we don't even talk about Solar City. It ended. It disappeared. Where did my wall of green batteries? Where did it go? It disappeared. Disappeared, gone. Okay, but Tesla is probably the most successful venture that he has done, other than PayPal. So they are the legends on PayPal, right? Other than PayPal, Tesla is probably the most successful venture so far. But even on Tesla, there are problems with security. They're not on any kind of QNX BlackBerry system, or they're not on any security infrastructure, right? So when you run cars that are extremely high tech, you're extremely susceptible to hacking. Right? Everything that is high tech has this serious problem, and if you don't have a security system, it's right. So this guy has really went down my trust level. I was like, nah. At best, I salute him for ideas. So when I saw his Bitcoin thing, I was like, sham. Yeah, told you. That was my super low level, emotional pitch about why you should not trust Elon Musk. What about you?
I agree with the whole the pump and dump. I think it's an issue that he's not actually being questioned about stuff like that, right? He has way too much kudos to him for building up his influence, and it really, I think it's a part of the reason why Tesla was able to get to where it is today is because of his influence, right? He was able to convince enough people to bet on him, to break, essentially raise the stock prices, to issue more shares, to get out of the whole liquidity issue that they were running into, right? But at the same time, to go and pump, put on part of your balance sheet with Bitcoin, and then accept it, and then making the price of that go up, or the value of it go up per se, and then a few weeks, months later to say, no, actually we're not going to do it anymore. And are they still holding their Bitcoin? Did they sell off before this? Are they buying more because of this? I feel like there's a lot of questions that need to be answered pretty soon, because this to me is just pure market manipulation at this point, right?
It is.
And I think when the whole GameStop saga started, right, and they were interviewing, what's that guy's face, the fucking value, and and thinking he was manipulating the markets. Why the hell is SEC looking into someone like that who's been transparent about his whole experience the last 2-3 years, and not looking to the people who are actually manipulating markets right in front of them, right? And maybe it's because the regulations don't go far, they don't know how to regulate the crypto space. But either way, I feel like someone needs to come in and say something there.
Yeah, I think that's definitely it. I mean, Tesla did release a statement saying they didn't sell any of their Bitcoins, right? Just before the statement. But again, it just so happened that it was right after earnings call as well. So I'm not.
Bro, they have 3 months. They have 3 months to clean up their books. Right after earning calls, this comes out. You have 3 months to clean the whole shit up, right? So it's the best time for them to play around, right? Until they have to release the numbers again. But of course, yes, it's very unregulated. So yeah, go ahead.
Yeah, so I think that's for me, just shows how fragile and volatile the market is, right? And the other news that got me is the Feds, right? Because talking about raising interest rates and buying back those bonds, that has actually effectively hit the Nasdaq and the Dow Jones, right? At least in this last week. And I was just reading an article saying that it's going to be volatile until summer, July, August. especially in the States, mainly because now the feds are going to start giving like hints that they're going to start buying back those bonds, which I believe is somewhere like 200 billion or something. Oh, I think 120 billion. I'm not sure. And they have to start buying all of that back, right? To get rid of all the, to make sure that all the quantitative easing they've done, taking it all back. A bit like, if you, usually what they do. Did you guys read that? What are your thoughts on that one?
Sorry,
Go ahead.
I don't really have any thoughts. I really haven't kept up with anything this week. But for those who are watching, can you kind of explain why buying back bonds equals or implies NASDAQ going down?
Yeah. So buying back bonds, that's one. The other one was they were looking to increase interest rates, right? And if they're looking to increase interest rates, one, they would buy back the bond before increasing the interest rate. But what that means is that the cost of borrowing increases. So your dollar that you could borrow, say you have to pay back $1.10 at the end of the year, would now become $1.20. For example, it just increased, and that actually means that no, I need to get that money back so that I can pay that back to the bank. And what this actually then shows is that, okay, I should take that money, not invest it as much because I cannot borrow as much. So during COVID, all of that was decreased. I could go into the bank and get a loan, and I could put that into the market and make more money. But as cost of borrowing increases, the return is not as attractive anymore. So you're going to say, you know what, I've made my money. I'm going to take that money back, and I'm going to give it back to the bank before they start raising that interest rate. And I'll keep the remainder because, you know what, I've made some money. The companies are doing it. These are corporates that are doing it. Your funds are doing it. Your investors are doing it. And small people like us are effectively just riding the wave and just making sure we come back. We come back with a positive return, which can't be said a lot this week, especially those that invested in crypto and other stocks.
Yeah, but I actually have a different view to this thing, right? So I don't think that whole part about like interest rates really shakes up the market a lot. Okay, so my view, okay, base idea is the Fed are referees. Okay, they are not market makers. So essentially, what does that mean? It means that these guys, they set the rules, they set the ideas, they set the suggestive rates, but they don't actually get to directly maneuver the market. They don't get to touch it. Okay, so what happens is after the Fed sets a reference rate, okay, it can be very low. Of course, today it's very low, right? 0.5, 0 to 0.5 is the reference rates. What happens is then the primary dealers, which are your big banks, they will then sell, at this rates, right? So they will lend out at this rates because that's the reference rates, or they will come together to have a certain understood rate, which is the SIBOR, right, or the LIBOR rate, where they will use that as a reference point to then lend money out into the market, and then as it moves out into the market, what happens is the interest rates will be higher relative to the original people that were lending out. Okay, so there's actually market mechanisms in this money market itself, right? So there are buy sell sides, there are multiple buyers, and there's a market in this place. It's not like the Fed say this, immediately that happens. No, you got to see how, like, what happens to LIBOR. Are rates moving in that sense? We got to see M2 and we got to see velocity. So is money moving in the markets? My argument is money is not moving in the markets, right? So you are not seeing velocity going up. You're seeing M2 becoming higher, yes, because they're hoping that given the lower velocity of money moving into the market, the higher money supply will make up for the loss in the whole GDP. Okay, but it is not like this happened and that happened. It's not a linear thing. There's a lot of facets in between. I think the recent sell-off in the tech space, at least in the high growth tech space, is really the fear of inflation. Okay, so the fear of inflation does not mean there is inflation. Okay, does not mean there's a high inflation that's already here. The market is always advanced of itself. So it's pricing in there's a chance that there's higher inflation. So given higher inflation, higher discount rate for future cash, right? Because if it's 2%, 10 years later, these tech companies are going to make money. Okay, let's say that's the whole idea, right? Oh, 10 years later, invest in us, we'll make money for you 10 years later. So then at 2%, the discount rate, it's okay. It's not as high. I think I did a calculation. $1 made in 2 years' time is worth 82 cents today. Okay, assuming 2% inflation. But if inflation goes up to 5%, a dollar made 10 years time is worth 64 cents today, right? So the difference is real. It's very, very big. So if you think about it, then you add a higher discount rate to tech stocks. That's why they're being sold down, right? Rather than the whole, that's my base case. Rather than the Fed is adjusting the interest rates and yields and all this kind of stuff. But that's how I see the idea. But whether or not inflation will come out, I'm not sure. But that's just my read. And the episode's coming on Tuesday, by the way, guys. So yes, stay tuned. Shout out to Tuesday's episode.
No, I think Reggie, you made a good point, right? So obviously the Feds can't manipulate it and do all that, and there are all these other variables that go into it, right? My question here is, you can see a correlation though, right? With the different variables and all that, you can definitely see that correlation. And given the sell-off in the tech stocks, is it just because, number one, people are going out again? People aren't really staying at home because of COVID and all the other things, especially in Europe and in the US. The vaccinations are through the roof. So that means more people can go out and actually spend money as opposed to just putting it into the stock market. I think these are clear different variables that we don't really have an answer to. Obviously, I don't know who has, but in all fairness, though, yeah, no one has. But for me, the way I look at the Fed is that it will. Yes, they are a referee. Yes, they're saying, okay, market is going too fast, etc., etc., etc. But it will put a thing in your mind going, okay, it's time for me to lay back a bit. Don't spend as much when it comes to investing, maybe, right? But as I'm going out, I'm going to start buying food. I'm going to start doing this and that. And offline marketing or offline stuff could actually work a lot better than all the tech stuff that we've been selling because everybody was in there at home watching their screens. So different variables, I feel.
Yeah, fair. I don't deny that. And recently, I think Oatly was listed. Right, Oatly for I know this wasn't planned, but I just want to bring out Oatly since we talk about like people spending out there, and that's just so like the US is opening up. Cali, by the way, big fan of Oatly. Anyone that's an Oatly fan, just shout out at the comment section. And any questions about what we're talking about or any recent things that happened in the market, you can just shout out. We can talk about it. But yes, any idea, any comments about Oatly? They got listed recently.
I mean, the only thing I knew was, my sister's been looking at Oatly for a while when she first found out that they were going to IPO. That's all I know, and I think it's shot up quite a bit. I think there's I think not speaking specifically to Oatly, but I think Oatly is considered a B Corp, right? They're certified B Corp. I feel like there are more and more investors, maybe like our age, millennials, Gen Zs and all that, who are more interested in, or like they want to be associated with companies that are doing good for society, or right. So I feel like they're for Oatly. Like I don't know what their exact financials are, but I do know that they, the moment they started trading, I think they shot up 10% the first day, and then another few percentage the next day, even in a market where like the rest of the markets were kind of like going down. And I think that's one of the reasons, right? Like all these younger investors who are like, you know what, I don't really care about the price of the value that I'm buying. I just want to be associated with that company, and therefore I will buy it, right? And maybe
GameStop and AMC.
I was gonna say, I think that's similar to like with the whole Tesla story, right? We know we're not gonna make any money on this, but we're gonna buy anyway, right?
Fair. I actually had a discussion with Samuel from Endowas, and we're talking about this essentially about how actually there are a lot of research showing that millennials are extremely concerned about what they invest in. Is it close to their ideas? Right, and we had a very long discussion about whether or not by going the whole ESG route actually gives you more profits. Right, so that will also come out very soon. I'm not gonna spoil it, but the whole idea is there is no clear correlation. Okay, that if you invest ESG, you're gonna make more money. Okay, but like what Chang Sun say, maybe the investors of today or maybe the investors of tomorrow are increasingly more concerned about this, and then they will have an ESG premium. So they will pay more for companies that are focused there. But I do see the whole trends with like vegan substitution or like meatless meats and all those kind of things. I do see Oatly as part of this trend. they're like part of a group, right? So I won't see them as an independent beverage alternative on its own, but just more like the whole movements towards the absence of meat and all those kind of stuff, which is a space that I previously wasn't very interested, but recently I've been spending some time to look at it, and we'll see how it goes. Maybe I have some good insights for you next time. Yeah. Any thoughts, Rakesh? Are you Oatly fan? Do you ask for oatmeal at 50 cents?
Hey, coffee with oat milk, right?
Yeah,
That's the way to go
yes,
nowadays.
yes.
Yeah.
Apartment coffee. Shout out to apartment coffee. I always go there for coffee with oat milk. Yes, continue.
No, I mean I agree completely, right? That it's not about just what they sell anymore. It's about what they represent. That together with your Beyond Meats and your Impossible Burgers and effectively your food trend moving towards these vegan options, environmental is actually quite a big thing, right? Especially with our teenagers and the younger adults nowadays, who are willing to pay a premium for these foods. I think that food tech is the next thing. I really do. Then I mean, I think it was Singapore, right? That they managed to make chicken in a lab without actually killing a chicken, if I'm not mistaken. And I think that represents where Oatly, to a certain extent, represents where the market is thinking, right? Where the people are thinking. So we'll see in 1 year's, 2 years' time whether the fundamentals of Oatly will correlate with the share price, or will it be one of them Teslas? It doesn't really make sense.
Hey, but if I'm holding Oatly right now, I want the Tesla story.
Yeah, of course you do.
Yeah, but are you guys like big on this whole like meat substitute future? Do you think this is gonna be a trend? Do you think more consumers will latch onto this? What are your thoughts? Because what I'm seeing is there are a lot of discount sales for these kind of products at this moment in time, in Singapore at least. Right. So I see a lot of discount. I'm not sure if this is like an early adopter strategy or is this like a discount process to kind of shed product. Right. So I'm not too sure about what is the idea, but yeah, what do you guys have any thoughts on this?
Yeah, so I mean, for me personally, and I guess anecdotally, a lot of people I know around, myself included, like we've consumed a lot less meat over the last few years, right? I think, I would say probably 3-4 years ago, I was probably eating meat, 7-8 meals a week, right? And now it's maybe 2-3, and the rest is just really just vegetables and all that.
Really?
Yeah. So.
Wow.
And like a lot of people I know is also doing something similar, right? Where I mean, if it's not like eating less meat, they're eating like your more like organic type of thing, or like no hormones or what have you, right? So I mean that's my anecdotal experience.
Yeah, I think for me as well. I've got a colleague that stopped eating beef because of the environmental concerns.
Because you watch Cowspiracy.
No, this was a couple of years ago. But I mean, we're talking about all these, talking about all these, like the carbon footprint and all of that when it goes into its meat and what they're doing as well. I think that's something for us to really be aware of, and they are right. They're taking small steps. And what I think, was it McDonald's as well that is coming up with the meatless burger themselves, and you can start seeing that, right? And maybe it could be wrong to say, but if McDonald's is doing something, it's probably because they've done enough research to know that that's where it's going to be in X number of years time, in order to keep market share, right?
Agreed. These companies don't come up with some new random product out of nowhere. There's always market research. There's always some prediction, right? So I totally get that.
Yeah, maybe their prediction or their research is, hey, look at Chipotle, like look how they've been doing since they kind of gone down that like ethical food or what have you, ethically sourced food or what have you, right?
Definitely.
Chipotle. Yeah, but speaking of food tech, like I personally like own something else in this space. Not going to divulge it here, but definitely open to talking about it in our members backend. So, if you're interested in learning about it and whatnot, definitely check us out at TX or financialcoconut.com/members. Got to put up a picture.
Yeah. It's okay. It's our show. We can be shameless. No worries. Cool. Any other companies? Any other interesting trends?
I was actually thinking if we could just do a quick quick, few things that we found fascinating about our interviews the last week. Yeah. So on Monday, why don't you talk about, share with the guests what was talked about on Monday and Tuesday, and maybe something you found fascinating.
What did we talk about? Okay. So I think Monday we talked a little bit about the Chinese stock market, Chinese markets, Chinese companies, and whether or not they have a future. What are we looking at in this space? So Alibaba, Tencent, JD, Pinduoduo, those kind of guys are all part of this cluster. But we specifically talk about Alibaba and Tencent. Right, so I think these two guys are not foreign in the space, right? They're everybody knows them, and it's kind of like it's a thing, right? So that's kind of where it is. Personally, I'm a big fan of the Chinese markets. I think a few things. Right, one, there's a Chinese premium at this point in time, right? People are not just kind of pricing it down. That's one thing. The other thing is, I think a lot of people are associating Chinese companies with the CCP, which is the government, which is technically not wrong per se, right? There is a lot of influence there, but I do think that as time comes, as push comes to shove, Chinese companies can operate independently also, right? So they have the capacity, they have the technology, they have the market, and hey, you gotta thank the government for having the guts to block out all these other players elsewhere so that local market could develop, right? So that's the part I thought was pretty interesting. If you guys want to learn more about these two companies that we talked about, you can check out Monday's live. Next Monday, which is tomorrow, we're also talking about Alibaba again, right? But with another person. So I'm gonna ask a different set of questions, but also talking about other companies, right? But generally, I think a lot of people are talking about Alibaba. I don't know, on YouTube, I see a lot of all these finfluencers. They're all talking about Alibaba, okay? But they're not like the TikTok rubbish people, okay? Like, okay, I'm not saying TikTok people are rubbish, but I'm just saying that TikTok as a content format is extremely unhealthy for investment-related discussion. Okay, so people that listen to TikTok ideas, they may have made some money, but I'm not sure if they can continue. But some of the more reputable guys on YouTube that have done very extensive long-form discussions about different companies, they are talking about Alibaba. So yeah, interesting company to look at. Yeah, Rakesh, any thoughts about China?
In all fairness, I'm actually not across the China market. It's one that I have not done a lot of research in. I've been told to look at it. I guess because it's heavily governed is a little bit of a question mark for me. But there's a lot of potential there, I feel. Can't comment much, to be honest.
Yeah, let's talk about this another time, right? We can have coffee and talk about China. But anyway, yes. So and then on Tuesday we had some Malaysian friends that came over, the Firo guys. We talk about Malaysian companies. We also talk about this like semiconductor company in the US. So I think a lot of people, when they're investing, they talk about companies like Oatly or Disney, Apple, very front-facing consumer brands, and you can start there perfectly all right, because this is the space where it's easier to understand, or you perceive that it's easier to understand. So either way, it's more relatable. You think you understand it, you can have why are you all laughing? Because that is the perception, right? People think like, oh yeah, I know, like I use Spotify, I know the business, but actually, dude, you don't know shit. But anyway, so it's like you understand the product, you experience the product. Yes, that's great. You understand the product for sure, but do you actually understand the business? That is the discussion at the back, right? But at least I think for a lot of people, a lot of front-facing consumer businesses gives you that kind of advantage when you're trying to understand what's going on. But if you want to find like deep value stock or companies that are like at the corners of the market that people don't talk about as much, where only the experts hang out, then maybe you want to go into spaces like semiconductors, microchips, FMCG companies that are not like big, and in the media circuit. Right. So, and we need to understand media is out to get your eyeballs. If there's no big scandals like Bill Gates, or there's no like big things that is happening, or no new innovation and ideas, these companies rarely make, the circuit. And because they don't make the circuit, they tend not to be priced to, they don't have a premium, they don't have a high premium. All right. So, but yeah, a bit big to say that they don't have a premium, okay, but at least they don't have a high premium. So yeah, so interesting to look at some of this space. Yeah, that's for me, Monday and Tuesday, man.
Nice. Yeah. Yeah. On Wednesday, we talked to Ruben about crypto. I think the most fascinating thing that was mentioned there was really the whole idea of, because with me as like I kind of identify myself as a value investor, right? Like I'm looking for the cash flow to justify a certain price, right? And in the crypto space, there is no cash flow per se, right? So how do you actually start justifying a certain price or what have you, right? And I think he brought up a really good point of with a lot of these cryptocurrencies, you actually need to use that currency to actually make that transaction, whatever, doing whatever, right? So for example, with smart contracts, you have to use Ethereum more or less, right? So for every time you want to execute something, you need to own a bit of it. And because you need to own a bit of it, there's technically now a demand for it, right? If you want to actually run something on the Ethereum network, you need to actually own that. Therefore, there's a certain demand. And given the current supply, then now it's really just a demand supply conversation, right? And therefore, you can kind of come to a consensus of what should the price of the Ethereum be at this very moment. So I found that super fascinating. Yeah, so that was Wednesday. Thursday, I wasn't really on that one, but it was around careers. Reggie, were you there or?
No, I wasn't there, but yeah, it was about careers. We talk about transiting from one career to another career, so that's something that I think a lot of people at this moment in time are interested in and looking at. Because whether or not you've been like shot out of your career, cut short, or whether or not you are taking this opportunity to explore something else, I think there are some good pointers in that episode. But I did take the Friday session, which was about entrepreneur, right? So essentially, entrepreneurship it's this platform that we're trying to build to let entrepreneurs come and talk about their shit, right? So, but in this process of talking about their shit, we want you to learn. So I think Claire Jedrick, right? She came out and she talked a lot. I was amazed because she is this like motorsport host. I wanted to use the word diva. I'm not sure if that is like I'm like sexist and shit. But yeah, she is that goddess, in the space. And for someone that is so prime and proper to come on to talk in that sense, talk, to be vulnerable and talk about her shit, I thought that was really cool. Yeah, we had a lot of learning points. She had a perspective. Of course, not everybody shares a perspective, but yeah, you can check it out. I think that's kind of what we did on Friday. Yeah.
Yeah, and on Saturday we had a quick conversation, or we had a conversation with Adam, who is a local YouTube influencer, or building out his own YouTube channel. So a lot of really great tips and tricks that he shared in there. So if you want to dig into that, and we talked about it earlier already, so by all means, take a look at any of those videos, and just want to make sure that everyone's aware of what's coming up. So on Monday and Tuesday, we do have a few more investment episodes. Reggie, anything you want to say about them, or any specific companies that might be talked about?
You could see our socials. Everything is up there, but we're going to talk about Facebook, Carnival Cruise Line, Microsoft, Pershing Square. We're going to talk about Pershing Square, this SPAC, okay, Bill Ackman, okay, this guy that's extremely controversial. He did short Herbalife, but he also did Valiant Pharmaceutical. I'm not sure if you guys remember this company that he did, and it was like a big bullshit that he did, right? So interesting companies out there. Yeah, he has quite a history, Bill Ackman. So let's take a look with Pershing Capital next week.
Yeah. And on Wednesday, we have Nick. She is a technical momentum trader. She learned it all herself, was doing a lot of currency pairs the last few years. And then I think over this past year, started doing more in the gold space. On Thursday, we have Terrence, who's really going to be talking more about your personal brand. On Friday, do we have our guests figured out yet or confirmed there, Reggie?
Yeah, Auntie Sam. I don't know if you guys use Auntie Sam, but yeah, Auntie Sam is essentially this like free give vending machine. So you sign up for Auntie Sam, and then you just kind of take free gifts. So it is a pivot from COVID, because during COVID, people couldn't, like, all your promoters could not be at NTUC or be at the supermarket or whatnot, right? So then this company decided, okay, let's replace the human with a vending machine. So right now they have an app ecosystem, and then they have this vending machine where you can just come on and you just use it, free give and all those kind of stuff. So it is an interesting innovation, and he's one of our listeners. So I was like, hey, come on, talk about what happened in COVID. What do you guys do? What's the plans and all those kind of things. So yeah, you may hear some insights about choosing vending machine locations, what is the prices, how the things works, all those kind of things. So yeah, you may not be a direct competitor, but you may get some information. Yeah.
Wow, that sounds really fascinating. I remember having a conversation with my friends before about like um, running a vending machine business or like an ATM business, all these little small passive income type of things.
Mhm.
I'll definitely super interested in that. And on Saturday, I'll have my friend Max. So she's actually a Twitch streamer. So and is that she actually has raised quite a bit of money for charities and nonprofits through Twitch streaming. So yeah, just gonna talk more about like how do you not go pro per se with gaming, but still be making money while gaming. So I'm super excited for that conversation as well.
Yeah, metaverse. Okay, and then next Sunday we'll gather again to recap and talk. Rakesh will join us again to talk about like what is happening in the markets. So let's all go and be a little bit more cognizant next week and kind of see what's going on in our radar, and let's kind of chat, right? So if you guys have any questions, feel free to drop in the comment section. We will follow up next week, okay? And then let's kind of see where it brings us. So yeah, that's all for today. Follow us on our socials, join our Telegram group, join our member. Everything is on the financialcoconut.com, okay? Meanwhile, take care, stay healthy, and I'm gonna take a break. So yeah.
See you guys.